Hello guys, I'm so excited to be with you today. Yes, welcome to my YouTube channel, Peeps Academy YouTube channel. In this channel is dedicated to trading generally, trading forex, trading cryptocurrency, futures, and any kind of asset you want to trade. And we'll be looking at a very wide range of courses. And I'll be starting with SMC. This is going to be an SMC full course, and this is the first lesson on the SMC focus. If you know you want to learn how to trade using SMC, or you just want to learn how to trade, or you're new to trading, I bet you SMC is one of the courses or one of the strategy that you will want to learn, because it's one of the most profitable strategy and one of the most popular strategy around in the trading world. You have to learn this because it it entails everything you need to know about SMC. And shout out to Michael Odunsi, the brain behind SMC. I'm telling you, this video that I'll be making is not going to be short of what Michael actually thought in his SMC trading course, in his ICT trading course. I'm telling you, you are going to get a lot of value from this. So if you know you've not yet subscribed to my YouTube channel, kindly hit on the subscribe button and turn on the notification bell so that you can get notified when I upload new content, because I'll be uploading all the lessons step by step in detail, so you don't want to miss any of the lessons out. And it's going to be a short one and a straightforward lesson without getting things complicated. And for those of you that want to speak with me for a chat, one-on-one chat or mentorship, my link to reach out to me will be in the description below. It will be in the description box below. So you just have to click on the link, then you'll be redirected to my WhatsApp channel that you can message me on, and then we can both discuss together. So that being said, let us dive into the trading course, the first lesson, market delivery algorithm.
Talk about price delivery algorithm. There are four components of price delivery that appear consistently across all asset classes. Now you have to understand why price moves and who is moving the market. Now I told you earlier that whenever you see your chart moving and you just saw price swing from this level to this level, and then we have a retracement coming back, who is acting in this level? This is where you need to understand who are the major players of this market. They are known as the whales. You can also call them the institutions, or you can call them the big boys, the people that have the biggest money in the market. Now, as a retail trader, you can only contribute little, and then the best way to remain profitable is to hide behind everything they are doing and then take advantage of that to make profit out of it. This is why we are doing that. Just like we said, we have four elements of price delivery algorithm. The first one is consolidation, also known as accumulation or a ranging market. Then the second one is expansion. The third one is retracement, and then the fourth one is reversal. There is nothing more than this in the market. Whatever chart you're looking at, whether stocks, cryptocurrencies, foreign currencies, whatever asset class you're looking at, these are the four components of price movement you will always have in it. If we scroll down, we're going to see them one after another, and then we will discuss what are they and how we can carefully spot them. If you don't have an understanding of this very basic thing, you will not be able to understand the advanced things we will be doing subsequently. So right here, a consolidating market or a consolidation is simply a market that does not have a defined direction. When price stays within a defined trading range and exhibit little or no willingness to go higher or lower, that is when consolidation occurs. As you can see right here, I have actually mapped out some levels where you can see consolidation, consolidation, and consolidation. So this is basically how to spot consolidation in a live market. You will always see this kind of thing repeating itself over and over. Right here, even right now, I can see right here is consolidation, where market is not showing willingness to go up or down. It is just within a certain boundary, just like this one. If I just take a line like this, and then you have price moving within this range, you have a consolidated market. And why is this happening? This happens because the market makers, or who we call the whales or the big boys, are accumulating order. Why is it happening? If we are to check this carefully, we will know that this level is a level where these guys take order from buyers or sellers to deliver it to another direction. For instance, these guys come into the market with very huge amount of money. Let's take $1 billion for example. If I'm going into trade like an institution and then I have $1 billion with me, okay, if I have $1 billion with me, this is just an example, okay. At this level, if I want to execute my trade and I have sellers that are willing to sell for me, less as the market is coming down around this level, I will have to accumulate order. People are selling it for me from this level to this level. And then I have $1 billion. If I have people selling just 300 million worth of the asset I want to buy, okay, let's say 300 million right here, which is MN, okay, and I have an order of up to $1 billion. You can see at this point I will have to wait for my order to completely fill. I have $1 billion, and then the only thing I could have to buy is $300 million worth of the asset I'm willing to buy. So the reason why this thing stays around this level is to ensure that all my orders are completely filled. The $700 million that will now remain will have to be filled over time before price will be delivered to the other side of the price movement, which you can always see right here. After consolidation, we can see price delivering down to this level, and then we have consolidation again. Market has been in this level over time. We can see it clearly from this range. Market has just been within this range for a while, accumulating, and then subsequently it delivers down. So this is basically why we have accumulation, where the big boys or the whales are gathering orders because they have very huge order to execute, and then they will have to wait patiently to accumulate order, whether they are buying or they are selling, before price will move. So this is why we have a consolidation in the market. And when prices are in a state of consolidation, it means that market makers are allowing orders to build up or collect on both sides of the market and are anticipating new expansion in the near future. So this is basically what I just explained to you. So the next one is expansion. Expansion, also known as the breakout, where you see people tell you breakout trading. It breaks out from that ranging market after they have gotten enough order, and then they are willing to deliver it to the next side of the price. So we can see when price suddenly moves away from a consolidation or accumulation level, this is known as expansion. Right here we can see from this particular picture I put right here, after it has accumulated or consolidated for a while, it broke above this level, violated this resistance level, and then that is when we saw price delivering to the other side, just like we've seen in the past chart we have right here. After it has accumulated for a while in this level, then it broke below this level to deliver to this end again. So this is where we have expansion. It's just expanding from that level. So retracement occurs when price returns to the most recent price range. Simply put, it is the movement that occurs following an impulse move or expansion move. So whenever you see price delivered from this level to this level, we expect to see price coming back to retrace or filling up the gap that is left here. Now I will show you this when we go to the chart. I will show you why this is happening, because imagine you are selling something from this highest price and then it comes to this lowest price. You definitely will be selling it very cheap. So you allowing it to come back to a half the price, or maybe to go back to the initial price, will give you more profit, or it will give you more benefit. That is why retracements comes into the game whenever we are dealing with price movement. So if we go to our chart right here, we can see retracement in almost every movement of the market. Let me delete this so that you're going to see it. If I delete this guy, now look at what happened from this place to this place. Price delivered from this level, okay, from this level to this level, price delivered. Let's assume at this point price is even here, price is around $32,000, okay, at this level, and then it came down to this level where it is $17,000, okay. This is very cheap. Imagine you are selling a product from this level, it then came down to this level, $17,000. You definitely will not be happy to keep selling it here. You will want to allow the price of that asset to move up again, maybe to half the price, which is around $26,000, okay, before you can keep selling it again. So this is why these guys allow price to take it up again and then keep selling. As you can see, once it reaches this level, they sold it again because they felt, okay, this is a level we want to keep selling again. We can see that price has given us a lot of chance to sell at a higher price again. So whenever these institutions are selling at this level, they are actually bleeding because they are not making money from it. The only way they can make money is when they allow price to push up again, okay, to the initial level, which is this level, or to come half the level and then sell it again. Then they can make more profit from that, and that is why retracement comes into the market. So when you understand who is playing out in this market, you would be able to know why certain things happen in the market, and then you will be able to know exactly when to expect this particular movement. So all I will request from you is to go ahead and check around and see where you can see price retracement. You can see from this level to this level, all this movement from this level is a retracement. This is also a retracement. Imagine somebody selling at this level to this level, and then it came back to almost $48,000 from 52. You will want to sell it again. So these guys kept selling it from this level again to push it down. You can see this repeating itself both on the sell side and then on the buy side. Imagine this one, from this level, somebody buying to this level, and then it is at this level very expensive. They want to see price coming down to maybe a cheaper price before they take it up again. So this is how this price delivery algorithm works. This is basically how you can spot out retracement in a live trade. So we can go to the last one, which is reversal. So reversal is when price reverses its current direction. It is said to be in reversal. So what happens is that if these guys buy from this level, they want to take it up to where they can sell it to somebody. Now, if the only way you can make profit from something you buy is when you sell it at a higher price. So this is why if they buy it at this lower price, they will sell it at this higher price. And then they allow it to come down again and take it up to sell it around this level. The reason why they are taking it above this last level is because everybody that is selling will have put his stop loss around this level. And then when you put stop loss for a sell order, you are actually saying I want to buy at that price. So a stop loss for a sell order is actually a buy. I will take time to carefully explain how these things happen for you subsequently during the course of this particular course. So you can see that these guys will accumulate order from here and deliver it to the next side of this particular price, allow it to come down, deliver it. So you can spot this in every kind of asset class. You can see them over and over repeating themselves. If you reduce this, let me expand this, you can see price have delivered from this level and then delivered above this level where people's stop losses are, and then reverses to this level, delivered below this level, and then reverses again to another level. You can see taking up and then push it down. So you can see reversal in every movement of the market happening over and over and over again. So once we finish delivering to the next side, we take it down again, price changes direction, deliver to the upside, take down again. This is how we are going to see it. I'm going to explain about market structure for you subsequently so that you get a very deep understanding of what these things are and how these things form. So you can see them. You can go to your chart and spot all these things I've taught you right here, and then we will continue with the